Hey guys, Ed here from freeforexprofitsystem.com. In this video I'd like to share with you a strategy which I use in my intraday trading. I call this the Derivich bounce, and it's used on the euro dollar pair on a 15-minute chart. So what I'm going to do in this video is basically go through the whole setup of the strategy and then look at some examples that have happened in this past week. So let's get started. Obviously, you need your MetaTrader on, which I have here. I don't have any charts at the moment. And what you want to do is go to your market watch, to euro dollar, and open the chart window. Now, as I mentioned, this strategy is based on the 15-minute chart. So change the time frame to 15 minutes, just up here. And I don't like using these grids, so I'm just going to get rid of them. They're quite annoying. Okay, and I'm gonna make my chart a little bit bigger with candlesticks. It's just the way I prefer to work, it doesn't matter. Okay, so in order to set up the first part of this strategy, you need to put on a moving average, which you can do by going to indicators here, go to trend, and then moving average. That's gonna pop up this prompt, and you put in for this strategy I use the 80 period moving average, so put in 80 into the period. Shift is 0. The MA method, the moving average method, needs to be exponential. The reason for this being that we want the latest price action to weigh the most into the moving average, and we apply this to the close. Now you can use any color here, I use the lime color. So once you're done with this, click OK, and we get our moving average. What I want to do is go back to the beginning of this week, and just so that we can get started from, let's have a look what's the beginning of the week. Today is the 13th of December 2012, so it's the 10th of December. Okay, right here. Okay, so what happens with this strategy, these are the rules. Okay, in order to buy, what you want to do is price action has to be trading above the ATMA. So once price action comes and hits the ATMA, you want to buy. When you buy, and this I mean, you can optimize this for yourself, but the risk that I use is 15 pips from the ATMA. So you put your stop loss about 15 pips below the ATMA. In this case, the stop loss would have been or was down here, and you can see how much I mean, it was a Monday obviously, so there wasn't much movement, but you can see the price really respects this well. Okay, so the buy signal is when price action trades above the ATMA and then touches it. That's your buy signal. You buy, you put your stop loss 15 pips below the ATMA, and then you look to take profits at least 15-20 pips above. So you're at least going to get a 1-to-1 risk-reward ratio. Now in most cases you actually get a lot more than that, and what I tend to do is you know, take half profits after about 15 pips and let the other half run, see if you can get more extracted from the market for that day. But that's not the what I intended for this video. So let's have a look at some examples of a sell order as well. Just move this up here. Okay, for the best sell order example is the one from last Friday, and I actually took this. This was a nice trade. So basically your sell signal is when price action is trading below the ATMA. It comes, touches the ATMA, that's when you sell. Again, you put your stop loss 15 pips above the ATMA, and you basically your first target is 15 pips below the ATMA. So what you're trading is the bounce off of the 80 and trying to extract as many pips as you can in a trending market as well as in a ranging market. So one of the main benefits of this strategy is that what I just mentioned, it works in a trending and in a ranging market. The ATMA provides really good support dynamic support and resistance for the euro dollar pair on the 15-minute chart. So I've been using this to generate anywhere between 20 and 50 plus. I mean, there have been days where I've generated a lot more pips a day, which is a pretty good return with minimal risk. I mean, 15 pips. If you can risk 15 pips, you shouldn't really be in this game. So, or you should just lower your lot size. But okay, so let's have a look at the examples that have happened over the past week. So as you can see, this is the 11th of December here. We have one trade, boom. This gives you a well, 25 pips. If you took half off at 15 pips and let the rest ride, you could have ridden this all the way up. I mean, there's 150 pips to be taken here. What I usually tend to do, which is what I mentioned earlier, is take half of my profits when I reach 1-to-1 risk reward, lock in the rest to break even, and then on the next touch of the ATMA I add another position. So I'm basically piling in with my position, looking to extract a lot more pips from the market. Moving on from the 11th of December, so we had 2 touches here on the day and then no touches until the next day. On the 12th of December we had another touch here, so one more trade. If you rode this trade, you would have gathered quite a substantial amount of pips. There weren't any more trades, so you do get the odd day where you do not have a trade. And then on the 13th of December, which is today, we did have a losing trade. What happened was price got here, touched the ATMA, we bought. It did go a few pips into profit. I mean, barely enough to go break even. I didn't go break even on that. That was a losing trade. But then once price action came back and retested the ATMA, which is this here, I sold again, and in this case I basically recovered the whole position, the whole loss from before. As you can see, there's like there was about 20 pips in that trade. So 20 pips, and then there was another losing trade here because we touched the ATMA. Another losing trade. I mean, it was quite choppy this morning. Another losing trade. Lost the default 15 pips here. As you can see, price action hit the ATMA, tried to go down, didn't. That trade lost. But then we had another 2 entries here. One entry at this is actually my broker time, so that's I think Central European time at 3:30 Central European time. So bounced off beautifully. I took half off the first one, and then it stopped me out because I put stop loss to break even. Then I entered again, and this trade gave us a nice 30 pip rise, and another trade setup which is currently active, which is a few pips in profit. So all in all, you can on a weekly basis you can make substantial amounts of pips just trading this strategy. There are some losers, as you can see, when the market is choppy. I mean, you get this with most strategies anyway. So periods where it does go through losers. But if you want to go further back, I mean, you can see many examples of the strategy working and generating pips. This would have been a loser, and there's always going to be one loser when the trend changes from short to long. But we had a really nice nice pip count here, nice winner. Again, we have this indecision sort of time where it doesn't know whether he wants to go long or short, but then once it does, you know, you get your you make a lot more money back. Again, setup here. This one was a bit too far away, and this setup actually at the time that it happened was very close to the ATMA, so I'm gonna highlight that too. And then, sorry, going back again. I mean, you get the idea. Price action interacts really well with the ATMA on the 15-minute chart on Euro, and this is a strategy which I use well, one of the many strategies I use, but I do use it on the euro, on the intraday, and usually I get 2 to 3 entries and make anywhere between 20 and 50 pips a day on this. So that's basically what I wanted to share with you today. If you want to join my newsletter, I run a newsletter and I share trading strategies, indicators, I do webinars as well, and that's at freeforexprofitsystem.com. I'm Ed Derovich. Thank you for listening, and I'll see you soon.